326.94 descending channel top. Having settled above it, the market has indicated, at least from my perspective, a retest of that 369.49 all-time high before the year is out. I'm going to say over the next 2 to 3 months is likely. Hi, this is Kerry Artek with Wicked Stocks, bringing you a YouTube channel weekly update on the DIA, that is the Dow Jones Industrial Average ETF. This is for the week of Monday, August 15th, 2022. These levels are good for the week. I'm going to be showing you weekly bar charts throughout. This is part of a regular series now that we're offering every week on the DIA. We're also doing the IWM. We have a whole list of markets. We intend to upload information, good analysis that you can use on a daily basis. We'll be putting out new stuff every day. So keep visiting wickedstocks.com or the Wicked Stocks YouTube channel. And subscribe, and please click like each and every time you watch one of those. It actually helps get the word out. It helps with our exposure on YouTube, and I really appreciate it. And if you're interested in any regular analysis in the S&P 500, the NASDAQ 100, the daily SPY, the daily Triple Q. We're also doing weekly TLT analysis and the Treasury ETF. You can find all that on wickedstocks.com as part of our premium subscription. And we also, in addition to everything I just mentioned, 2 individual stock picks a week. And so there you have it. Let's move on to the charts. So this, I'm going to backtrack just a little bit and show, that in June we bottomed out essentially at the pre-COVID high. I think that was February of 2020, the 295.95 high before the big COVID crash. And we fell back to it in June, put out a low of 296.39. And from there, we settled last week, opened above it as well, and obviously closed above it. 326.94 descending channel top. Having settled above it, the market has indicated, at least from my perspective, a retest of that 369.49 all-time high before the year is out. I'm going to say over the next 2 to 3 months is likely. There'll obviously be give and take on the way up, and I'm going to show you some of those levels here in a moment. We also last week settled above a former rising channel top that was nearer term, a 2 to 3 month rising channel top. The descending channel top at 326.94 was more in the 5 to 6 month, 7 month actually. You could even say 8 month the framework, whereas that rising channel top this week at 327.64 is a 2 to 3 month rising. That area is solid pullback support this week that, if retraced down to, can absorb selling not only into September, but perhaps through the rest of the year. This is our base, at least for the time being, in terms of trend-defining support levels, and above which this updraft continues. I don't think it's going to be straight up to 369.49. There'll be give and take on the way up. Another key level that we took out last week was the descending 2/3 speed line. Now, I will mention that neither the S&P or the SPY, whichever you prefer, or the Triple Q or the NASDAQ 100 have actually reached their descending 2/3 speed lines. The S&P is closing in on it. The NASDAQ is still a ways off because it actually had a more significant sell-off, so there's more ground to recover on the way back up. I'm not going to get into that right now. I'll just let you know that as far as the Dow is concerned, it actually eked out a settlement last week above its 2/3 speed line, which is also a positive development. So you could consider 335.51 your early week support on Monday. Assuming we, of course, open above 335.51 and above 335.51, I do think it's likely that we'll reach the 5/8 upside Fibonacci this week at 341.57. That's a decent weekly resistance area. We could trade inside 335.51 floor of support, 341.57 ceiling of resistance for a good part of the week, maybe the week itself. But, if history is any guide, following the settlement above the 326.94 to 27.64 area, and given the fact I maintain now an end-of-year objective at 369.49, there's nothing to say that we won't close the week above 341.57. And if we do, I think that the lower 350s are our next objective. That could be within a week, could take 2 to 3 weeks. But if we close above 341.57 at the end of this week, then I think the 353.71 to 54.87 area is likely within a couple of weeks, 2 to 3 weeks, and that is sort of the late March into mid-April, kind of a double top there, as you can see, that pullback area. I think that's going to be meaningful. I would expect at least weekly highs there, quite possibly on a monthly basis, on our way up to, once again, 369.49, which I'll call a 3 to 5 month objective right now. So holding above 335.51, 341.57 expected within the week, where we could top out for a day, possibly the week itself, and back off. If we close above 341.57, even on a daily basis, we should see follow through buying. And certainly if we close the week above 341.57, 2 to 3 week objective next into the 53.71 to 54.87 area. Now, if we back off, and any daily settlement below 335.51, FYI, would be cause to consider the possibility of falling all the way back this week into the 326.94 to 327.64 area. Solid zone of support presently, able to contain selling through September trade, quite possibly the rest of the year. There is also last week's low of 327.19, so there is a lot going on in that vicinity. I think we can simply say that if we close below 326.94 at the end of this week, there is a pretty solid sell signal. I'm going to say our quick first target, 317.45, but I will say that after all these gains and closing then back below 326.94, you need to allow for the possibility of a full unraveling all the way back into the mid 290s. I hate to say it, and obviously there's no certainty with regard to this, but if we close the week back below 326.94, you should, I think, prepare yourself for a 295.95 objective. That could play out possibly by the end of September, probably more into October. And once again, that is the season for big sell-offs. Not every year, but quite often we have a big October surprise. And so I don't want to be over-traumatizing this. I will just simply say that if we close the week below 326.94, you should allow for 295.95 by the end of October or sooner. And on the way down, 317.45, decent support for those of you who trade the DIA on a daily basis, swing trade basis, or on a weekly basis. That is a good support area to buy into on the first attempt. But if we finish the week out, then this week especially, a couple things would happen here. Not only if we close this week back below 326.94, do we have a violation of a meaningful descending channel top that would be considered a failed longer-term buy signal, in essence, a valid sign of weakness over the near to mid-term time horizon. But we would also be closing below the last week's low, which so far is the move high or the pullback high. And so if we push to a new high this week by just a bit and then fall off and close below 326.94, we'd also have a key reversal high, which is a sign of aggressive follow-through selling anyway. Combination with the settlement back below the 326.94 channel top, and I think we have ourselves a sign of significant weakness as we move into September trade. Yes, 317.45, good area to buy short term, but if you're looking at the big picture, if you're looking at over the weeks ahead and into October trade, 295.95 would be calling again, in my opinion. I will mention that if we do retrace all the way back to 295.95, and it's not expected, once again, unless we close the week below 326.94, I'll just mention, though, that while it can contain selling once again through the rest of the year, perhaps, closing below 295.95 would set off another meaningful sell signal that I think in the scope of probably 3 to 5 weeks, we should fall into this zone of speed line support, significant long-term support that begins at 277.73. That is a rising 1/3 speed line projected off that significant 2009 financial crisis low, and a rising 2/3 speed line that is projected off that March 2020 COVID low, 266.23. It's interesting, and I'll mention this just as I'm looking at this chart, that the NASDAQ The triple Q, the NASDAQ 100, actually tested its rising two-thirds speed line in June. That is the equivalent here of 266.23. That kind of puts it into perspective in terms of, the blue chip 30, the Dow Jones versus the NASDAQ 100. The NASDAQ fell a lot more than the Dow did in relative terms. It actually tested its 266.23 speed line equivalent and held beautifully. I'll mention that. Pat myself in the back, I suppose, as we called that speed line able to contain quarterly, possibly annual selling pressures in the triple Q. Once again, I guess I'm plugging my daily triple Q report and my NASDAQ 100 index analysis that I do on wickedstocks.com. You could check that out by going to the premium section of our website. I'll leave you with this image. I think this says a lot. 335.51 is our early week pivot point. Assuming we open above it, we should reach 341.57 this week, a 5/8 upside Fibonacci over the last 8 months extremes. And if we happen to break or open this week or close any day this week below 335.51, you should prepare for a 326.94 to 327.64, a potential intra-week objective where we could bottom out through September, possibly the rest of the year, and above which we should, by the end of the year, reach up to that 369.49 all-time high. I'm going to leave it at that. That's all I've got for this week's weekly DIA. You have a great week, and we'll be back soon. Please click like and subscribe.